So as I've explained, it's the fastest growing adoption of any technology in all recorded history. We're going to go from 150 million users to 1 billion users in 3.5 years. It is going from 2 trillion to 200 trillion as an asset class, probably in 10 years. So this is the largest tailwind for any investment we've ever been given. Not only that, but it's creating an entirely new business model for the world. So the baby boomers' unique problem. Because of the advancement in science, healthcare, and all of these things, nobody knows how long they're going to live for. And the probability is they're going to live longer than they think. And that means, do you have enough savings to retire on? Right, that's the only question for baby boomers. So, okay, if you want to insure against the risk of your longevity, which is obviously the thing you want to celebrate, then if you were to allocate 5% of your portfolio to cryptocurrency, just 5%. So let's say Raoul is an idiot and it all falls 50%. You lose 2.5% of your net worth. You don't even notice it. If I'm right, and it goes up 20x from here, 50x from here, you've doubled your net worth. So that allows you to live another 20 years. This is why it matters to baby boomers. It is the greatest policy against not having enough retirement savings because you're going to live longer. When you talk about rise and fall, people are going to think we're talking about oil prices that do this. No. What we're talking about is a rise and fall in an exponential trend. So even though it's fallen 70%, that was on the back of a 10,000% move. And then it goes up another 5,000% and falls another 70%. What you're doing is going up in this big volatile trend. But the biggest trend of all is that the price rises are exponential. So what it means is you need to have a longer term time horizon. You don't get in this to think I want to get rich in a year, because if you get the wrong part of the cycle and it goes down, you're going to have taken too much risk and you're going to feel terrible. If you say, you know what, if it falls, I'll add a bit more if it falls down, because we know where the trend is going. We know that all of this adoption is happening and we know it's volatile. So we should use the falls in price to our advantage. And once you get that mindset on, the buy the dip mentality, you'll succeed. You don't need to be a genius. You just need to look at adoption. So this space is all priced in something called Metcalfe's law. Metcalfe's law really came about from computing, but mobile phones was the easiest example. 1 mobile phone, worthless. 2, reasonably good if it's somebody you want to speak to, not very useful if you don't want to speak to them. If everybody has a mobile, you can now reach everybody on Earth. Okay, then those same mobiles, you could put data on and have the internet on, and that changed everything. Then the computer world came along and interacted with this world, and now we've got these 2 networks, and it's made mobile computing turn into this, a supercomputer on your phone. And what this is the network of money, and they all follow the same thing. Metcalfe's law is the number of nodes on the network, i.e. the number of users, and the amount of connectivity between the users creates the value of the network. So what you do is look at these cryptocurrencies and say, right, how many people are using it? A lot of people, is that network growing? And are people building stuff on it? If you can answer those questions with yes, then you've got a good investment. And the ones that I see that in right now are Bitcoin, Ethereum, Solana, Terra, and probably Polkadot or Avalanche. And those are the ones that are larger market cap. We're seeing real use cases, lots of people adopting it, and lots of people developing applications on it. So those are the bets, but really, you only need to take one bet. Just take Ethereum. It's like Ethereum is like the internet of it's like the internet of money. It's like the software platform that everything is being built on. And it may not go up the most, but it's going to go up a hell of a lot because it's got massive network effects. It's easy to understand, it's easy to trade, it's easy to buy, it's liquid, and you don't have to learn too many new things. So as I've explained, it's the fastest growing adoption of any technology in all recorded history. We're going to go from 150 million users to 1 billion users in 3.5 years. It is going from 2 trillion to 200 trillion as an asset class, probably in 10 years. So this is the largest tailwind for any investment we've ever been given. Not only that, but it's creating an entirely new business model for the world. Everything is going to get tokenized, from real estate to stock markets to bond markets to currency markets are all going to be tokenized. On top of that, people are using this to build business models, something called Web 3.0, which is where you give a community a system of money and say, well, look, you could all work together and build your own network. There's decentralized finance. There's non-fungible tokens, which allow you to have digital art and real things of value. Somebody's just got some Aussie wine that they've auctioned as an NFT, so you get the rights to wine every year from this NFT. It's like, okay, this is interesting. So basically, everything you buy, sell, own, store, transfer is going to be digitized. And this is that world. So if you can find me anything bigger, I don't know anybody who could. This is the very system of money and value itself. And it's about to be disrupted by technology, considering that the old system of money has basically been around for a few thousand years, and we're about to change it all. That's how big this is.
Raoul, I think that everybody needs to hear you say that.
I do too. And I passionately believe in this. And I'm like, you can't sit and complain that the central banks are screwing you. You can't sit and complain about, I can't find an opportunity, I can't afford housing in Sydney. You can't complain about the stock market's too overvalued. When here is the opportunity, you can fractionalize it. You can buy $1 worth. Anybody can participate. Everyone can put 10% of their net worth in this, however rich or poor you are. So I don't want people to say, we didn't know, those were for the rich guys. This is for everybody. Take advantage of it. Whether you're young, whether you're old, whether you're rich, whether you're poor, whether you live in a faraway country where you've got no opportunity, or you live in central Manhattan, this is for everybody. The debasement of currency makes it look like the markets are going up. If you divide the Aussie stock market by the Royal Bank of Australia's balance sheet, you'll find that it hasn't gone up a lot. What you've got is poorer, because every dollar of earnings you get today buys you less stocks. So your expected future wealth is less. What is an asset? An asset is your ability to buy something now to store your wealth, to be able to consume later. That's all it is, right? So why do you buy second property? So you can cash in later for a higher price, and it will have protected your savings and grown them. Well, the problem is if your wages don't go up and the stock market goes up, each year you earn the same salary, you can buy less of this stuff. So your future self is poorer every year. And it's because of the value of fiat currency being debased. So this is what makes equity markets look like they're always going up. Unless they're going up at 15% a year, you ain't even breaking even.
So you're saying it's like an artificial bubble.
Correct. It's not a bubble. The bubble is in the collapse of fiat currency, not the stock market. So if you look at the stock market versus the real estate market versus gold, they're all pretty much in line. So it's not that everything is a bubble. No, they've made it look like a bubble because the currency is being debased. I know it's a weird concept to get your head around, but it is really, really important. And if people are interested, I did a whole piece on this that is one of the most viewed pieces I ever did, maybe 2.5 million views on YouTube and on Real Vision, where I first did it, called The Exponential Age. And it explains this and shows you all the charts so the penny can drop, because this is something everybody must understand, is what this is about and how your future self is getting poorer because of this very phenomena.
any last words you would like to say to everybody?
Just do it. You know, don't wait for the price to fall. Don't just buy some and understand, as I said, understand it's volatile. Understand you'll feel sick when it goes down a lot, but then dollar cost average, just buy a bit more. Don't leverage. Don't use leverage. Please don't use leverage. Just think of it as this long-term opportunity, the likes of which you've never been given, and just smile to yourself and say, thank you.
Fantastic.